What's going on, everybody, and welcome back to yet another video. In today's video, I'm going to be breaking down a super simple swing trading strategy that you can start using right away to help you make money in the market. And this strategy is going to be perfect for anyone who can't stare at charts all day, works a full-time job, or you're just looking for an extra income source through the market. But real quick, as always, before hopping into the video, if you guys do find value, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so starting off, I want to break down the two main indicators that I use for my swing trading strategy. So what I have on this screen right here is going to be the 21 EMA, which is this white dotted line right here. And then at the bottom of the screen, I have what is known as the TTM squeeze. Now, I am going to be explaining how to use the TTM squeeze in this video, but if you guys want a further in-depth tutorial on this indicator, I have multiple videos on my channel. So if you guys want to check those out, I will be leaving those links down in the description. But first, I want to talk about this 21 EMA. Now, really, it's up to you if you want to use the 20 EMA or the 21 EMA, because they're honestly like pennies of a difference. But the reason I use the 21 EMA is just due to Fibonacci. But the 21 EMA is going to act as the mean of the stock. So when price reverts too far away from the mean, it's more than likely going to retrace back to it. So if we're looking all the way over here, price overextends from that 21 EMA, pulls back, makes it support. Over here, pushes away, comes back, makes it support. Breaks below the 21 EMA, makes it resistance, comes back up to it, resistance. Bunch of price action right here, bunch of price action right here. Then we start pushing back up to the upside. We come back, we make a support multiple times. Push up, support, all through here, this entire uptrend. So that's just the examples on the daily. Let's go to the weekly. Looking at the weekly time frame, very recently, I made a video saying that we were gonna bottom out at this weekly 21 EMA. So we had price push through it. It hasn't tested it since November. And then that first time it came back, it made it support. We can even go to the monthly time frame. As we see, price pull back to the monthly 21 EMA, made a support, nice move up. So that 21 EMA on multiple different time frames, and we'll be talking about the time frames that you want to use for your swing trading here in a little bit, but just understand that the 21 EMA is a very, very important level, and it is one of the main factors that I use when identifying a swing trade. Now, a big part of my swing trading strategy is, first off, I mainly swing trade to the upside. That's just where I make the most amount of my money. So what I'm looking for is I want to see price building a base above that 21 EMA as support. So a swing trade that I've taken in the past was on Costco, and this is actually a really, really good example. So if we go to the monthly time frame, what I mean by building a base on top of the 21 EMA, I ended up getting long on equity. I believe it was this candle right here. My average cost is 512. But as we can see on the monthly time frame, price is constantly holding support on that monthly 21 EMA. So that's what I mean when I say I'm looking for price to hold the 21 EMA and build a base on top of it. Or if we head on over to a swing trade that I'm still in on silver and we go to the quarterly time frame, it was the same thing. Price was building a base on top of that quarterly 21 EMA, and it was holding it as support. So again, you want to see price building that base on top of the 21 EMA. And if we're getting bullish price action off of that 21 EMA, that is a very good sign that they're going to try to push price higher. Now, the second thing that I am looking for is going to be a squeeze. And make sure you guys stick around until the end of the video, because I'm going to be explaining a super simple way that you can identify these setups. Instead of flipping through hundreds of different stocks, I have a very simplified way that you can find these. But pretty much what a squeeze is looking down at this TTM squeeze indicator, you can see that we have these red dots right here. Now, when we have the red dots, that is telling us that price is in a squeeze. So imagine you take a Ziploc baggie, you blow air into the baggie, and you just start twisting it up. Eventually, that air is going to get very, very compressed. And when that bag pops, all the air is going to come out. That's essentially what a squeeze is in the market. So going back to silver on the quarterly time frame, as we see, we have those red dots and we're holding that 21 EMA as support. I entered at the end of this candle right here. Well, this is a very large move on silver in just, 2 months to the upside. Or if we head on over to Meta on the 3-day time frame, you can see that we had this squeeze over here. It stayed in that squeeze for a very long time until eventually that squeeze fired. And then we saw that huge move to the upside. So those are just a couple examples. And actually, here's another one, since I just went to the weekly and we see it, same thing, weekly squeeze. And eventually, once that squeeze fired, we saw a really large move in Meta. So during that squeeze, price is very, very condensed. And when the squeeze fires, again, we are likely going to see a larger than average move. And as swing traders, this is what we want to take advantage of. And the reason why I only swing trade squeeze setups, again, one is because it's telling us that a large move is coming, but also because when price is in a squeeze, it's very condensed and the volatility is very low. So because the volatility is low, that makes the contracts cheaper. And when you buy the cheaper contracts and the squeeze eventually fires, the implied volatility is going to ramp up. You're going to make money off of that Vega, but you're also going to be making money off of your Delta and Gamma. So again, the red dots is telling you that price is in a squeeze. The black dots are telling you that the squeeze is beginning to fire. And then the green dots are telling you the squeeze has officially fired. So once we start getting those black and green dots, that's when you can expect the stock price to start making the larger move. So now what do these histogram bars mean? As we see, we have light blue momentum, we have dark blue momentum, we have yellow momentum, and we have red momentum. The light blue momentum is telling us that there's strong buying momentum. So as these bars grow, the stronger the buying momentum becomes. Dark blue is telling us that the buying momentum is dying down. Doesn't necessarily mean that the stock price is going to pull back. Maybe it just consolidates a little bit, or maybe it slightly pulls back or just sits in a range. But if price continues to hold above that 21 EMA, the dark blue momentum is going to go back into light blue and we should see a continuation. So again, light blue, strong buying momentum, dark blue, buying momentum's dying down. Price could consolidate, could pull back slightly, but as long as we hold the 21 EMA, it should go back into light blue. Now on the flip side, we have red and we have yellow. With the red, this is telling us that there's very strong selling momentum. Again, the larger the bars are, the stronger that selling momentum becomes. So as we see on the way down on Meta, we have that red momentum and the bars are growing, representing strong selling momentum. Now from here, when we get the yellow, this is telling us that the selling momentum isn't as strong. A little bit of buyers are coming back into the market. But again, it doesn't necessarily mean that price is going to go straight back up. Price could consolidate for a little bit down here. It could slightly move up. But as long as we hold below the 21 EMA, that yellow momentum is more than likely going to go back into red, and then you should see that continuation down. So as we see with Meta right here, price, really did not do too much on the weekly. We had that yellow momentum, yes, but because price was still below that weekly 21 EMA, the overall momentum is still to the downside. And then it wasn't until price reclaimed that 21 EMA that we finally started to see light blue. Now, another thing that I do want to point out, because sometimes this does happen, let's see if we can find an example. Price could be below the 21 EMA and we get light blue momentum. I don't really see any examples on this chart, but we could get light blue momentum if price is below the 21 EMA. But again, I don't care about it unless we get back up above that 21 EMA. So now that you know my overall strategy when it comes to swing trading, again, I'm looking for price to build a base above the 21 EMA. I want to see a squeeze with price showing bullish reactions off of that 21 EMA. And this sets up for a high probability swing trade. I take the same exact setup on my swing trade over and over and over again, except it's just on a different stock. And very quickly, how do I pick up on stocks that meet this criteria? So what I ended up doing was I just built a bunch of scanners ranging from the daily time frame, the 3-day time frame, weekly, monthly, and quarterly, picking up on the same exact example that you see right here on Meta on the weekly time frame. So if we just pull up Lockheed Martin, which is the first one that hits this scanner, and we go to the quarterly time frame because that's my quarterly squeeze scanner, you can see that we have the same exact structure. So if you guys do want access to all of my scanners, just shoot me a DM on Instagram at Brandon Trades, and it's also on the screen right here. So make sure you guys shoot me a DM over there saying scanner, and I'll tell you guys how to access those. So now when it comes to the overall time frames that I am looking for swing trades on, I'll say recently I've been putting a lot more emphasis on the monthly and quarterly time frame. Those have been bread and butter recently in this market, especially because we actually have like a lot of monthly and quarterly squeezes, but also because the higher the time frame, the more important the setup is going to be. So we are going to see a larger reaction based off of a monthly squeeze compared to a daily squeeze. So something that we took recently was uranium swings, and this was based on the monthly time frame. I ended up entering this month right here. You can see that we had that monthly squeeze. Price was building that base above the monthly 21 EMA, and it broke above that trend line right here. Those contracts ran almost 300% from my entry. Or SU is another good example on the monthly time frame. We took this recently as well. monthly squeeze, as we can see down here. Price is holding that monthly 21 EMA as support. It broke above the trend line. I got long right here and was able to capture a beautiful move to the upside. And again, if you're somebody who can't stare at the screens all day, or you can't monitor it every day, going to those higher time frames such as the monthly and quarterly, it's going to take longer for those trades to play out. Therefore, you don't have to monitor it every second of the day. Now, something that's based off the daily time frame, you're going to have to be a lot more on top of that because it's going to play out quicker. So the higher the time frame you go, the more time it's going to take for the trade to play out and the less maintenance. The lower the time frame that you go, the more maintenance it's going to need because the trade is going to play out quicker. So now for me personally, when it comes to swing trading, I don't look at anything lower than a daily time frame because again, these are swing trades. We don't care about what's going to happen in the next 5 minutes. We care about predicting what's going to happen over the course of the next few days, few weeks, few months, whatever it may be. So again, all of those scanners are going to pick up on a variety of those different time frames, which is why I designed them. That way I didn't have to scroll through hundreds of different names to find this exact setup. It's super simple. I just pull up my scanner and it takes about 30 seconds to run through the stocks. Anyways, so as far as expiration dates, right? Because I get this question all the time. It depends on the time frame that you select. So if I'm basing a trade off of the daily time frame, I don't have to go too far out until my expiration, maybe like a couple weeks to a month. On a 3-day time frame, I'll go anywhere from like a month to 2 months. A weekly, I like to go at least 2 to 3 months out. On a monthly time frame, I like to go at least 6 months out. And then on a quarterly time frame, I at least like to go a year to a year and a half out until my expiration date. But again, it's the same setup just playing out over and over and over again on different stocks and different time frames. So like this SU example on the monthly time frame, this is a picture perfect swing trade of something I would take. Something that I took recently was on ADP, and this was based on the daily time frame. Caught about like a 50% move to the upside on this before getting stopped out the rest. But still, this was a beautiful setup. Daily 21 EMA, daily squeeze, got a nice pop to the upside. Or Hood on the 3-day time frame. This isn't a trade that I ended up taking, but it was something I was watching, just unfortunately couldn't get into it. But if we go to the 3-day time frame, same thing. We're holding that 3-day 21 EMA as support. What ended up happening, we made a beautiful move to the upside. So again, same setup over and over and over again, just a different stock and a different time frame. And there's a reason why I only swing trade this strategy. If you guys have swung with me before or see my tweets whenever I tweet out about a stock that I'm watching for a swing trade, it's exactly what you see on this screen right here and exactly what I just explained. But anyways, that's going to wrap up this video on this swing trading strategy. Again, look for price to build a base above that 21 EMA. Look for the squeeze, letting you know that price is more than likely going to make a larger than average move. Piecing together that price is building that base on top of that 21 EMA with strong buying momentum, with a squeeze lets us know that price is more than likely going to continue in our favor. And as far as a stop loss, typically I keep that right on the opposite side of the 21 EMA. But anyways, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. And again, if you guys want access to my scanners, shoot me a DM on Instagram at Brandon Trades, and I'll tell you guys how to access them over there. Everybody have an amazing rest of your day, and I'll see you guys in the next video.